My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be able to make friends. I'm just trying to make you a little money. My job's not just to entertain, but to educate and explain how we keep hitting all these records. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Forget artificial intelligence for a minute. Right now, this market is often in the grip of authentic stupidity. Including today, where the Dow gained 156 points, S&P advanced 0.82%, NASDAQ jumped 0.95%. What's authentic stupidity, and how does it play havoc with your judgment, especially when so many companies are doing so many things right? Let me give you some examples over the last couple of days of really positive things that were turned into negatives by authentic stupidity. Take the selling in the stock of Eli Lilly yesterday after a spectacular quarter. Lilly is arguably the best performing drug company of our era, if not all time. And its stock opened up about $35 yesterday, but slowly but surely worked its way down to finish off just over $1. That decline can largely be attributed to authentic stupidity, because there was so much to like about Lilly's conference call. I'm not just talking about Mounjaro and Zepbound, their diabetes and weight loss drugs, because those were a ton of great things about those things. The first, that Lilly's revolutionary weight loss drug might actually work against MASH. That's a type of fatty liver disease, not to be confused with the all-time great comedy series of the same name. And if this wonder drug can work against serious liver disease, we could be talking about 15 million more people than we thought that could be taking this drug just in the U.S. alone. Something made all the more impressive by the fact that we don't have any good treatments for this sometimes fatal condition. We learned of this yesterday when Lilly unveiled its phase 2, not 3, 2 clinical trial results, and those numbers were stunningly positive. 74% of participants achieved an absence of the disease after 52 weeks, versus less than 13% for those who got the placebo. This result was so new, so hot off the presses, that the analysts were caught by surprise, with one speculating that maybe it wasn't so spectacular, or else why hasn't the FDA considered the drug for accelerated approval? The Eli Lilly people, very gracious as always, were too kind to suggest that the analyst questions were powered by, yes, indeed, authentic stupidity. The chief scientist answered simply that the information was too new, so new that they haven't even been able to communicate the results to the FDA yet. Now, I think these trial results for a big unmet need, they could accelerate the approval of the drug for several liver issues, including fatty liver disease and, yes, cirrhosis of the liver. Until recently, this kind of treatment might have been limited to non-alcoholic liver disease. But now that the medical community has expanded the definition to include heavy drinkers, it's a gigantic group. I expect a bigger test than the 190 participants in this trial, because maybe several, maybe one centered around those who had 2 drinks or more a night. But it's entirely possible that the FDA grants them accelerated approval because the disease is already so deadly and the drug in question is already on the market for diabetes and weight loss, so its safety is not in question. Second positive, on the same conference call, Lilly revealed that the FDA should rule this very quarter on their Alzheimer's disease drug, which the company believes has substantial benefit potential. Again, this is Eli Lilly. It's an incredibly cautious company. Can you imagine where the stock would go if the FDA gives them a thumbs up in the next few weeks? But those using their authentic stupidity co-pilot dumped the stock furiously because others were dumping it, something that Bard and ChatGPT flagged to me as being dumb as wood. Today, the stock deservedly rallied $20 back. Second example of authentic, sometimes known as native stupidity. People jumping in to buy shares in New York Community Bank the other day, only to find out that the company had lost its chief risk officer and chief audit executive, but simply hadn't disclosed it in time, which, believe me, is par for the course from this outfit. Given that 60% of the New York Community Bank loan book is in the now despised high-risk commercial real estate category, according to Morgan Stanley, it took degenerative, natural stupidity to recommend this one, let alone buy it. Third, I know that cybersecurity companies use deep learning and machine learning to catch the bad guys, but what I didn't know is that some traders use small language models to figure out what cybersecurity stocks to sell. They always seem to think they should dump the cybersecurity stocks, even though this may be the strongest theme of our group. Shallow learners, yes, as opposed to deep learners, had been fleeing Palo Alto Networks and CrowdStrike over the last few days, but they came flooding back today when Fortinet, a not strong cybersecurity company, didn't blow the quarter. Authentic moronic behavior, perhaps? They should never have sold. But the best, by far the best example of authentic stupidity, or perhaps its close cousin, natural lunacy, might be from a nameless D.A. Davis analyst who on January 2nd assumed coverage of Apple with a neutral rating. That's right, a hold, and a price target of $166, almost $20 below where the stock was trading at the time. The headline, oh, I like this one, waiting for innovation, assuming coverage with a neutral. Why? Because the analysts believe at $185 price, right? They think it should go down to 166. Why? Because, well, the 185 price reflects, and I'm quoting, expectations for significant resumption of growth, which is less likely without an innovation breakthrough, end quote. More broadly, the analyst continues, we await Apple to get unstuck on the innovation front, end quote, before he's willing to upgrade the stock to a buy. That note caused shudders, because if you start the stock with a hold and a $166 price target, it signals that something's very wrong, going very wrong. Apple off the rails, perhaps? Before it falls 20 points, maybe you got to get out. Now, after Apple reported on February 1, this unnamed analyst talked about mixed results and the need to keep the stock as a whole with a $166 target. Why? Because he says in order for the company to see meaningful growth in current and new products, it will require them to get unstuck on the product innovation front. Ha ha ha. Though we may be witnessing a case of genuine, homespun, natural stupidity on our hands, because less than a week later, whoa, here we go. The same analyst got a chance to experience the Vision Pro firsthand. And what do you know now? Today, he's upping his $166 price target, the one that alarmed the whole street, taking it to $200. Why? Because as the piece's headline, game-changing innovation is back. Yep, he goes on to explain, quote, this product is a sign Apple can still innovate on the hardware side and will be in pole position for what we now consider a validated category of spatial computing, end quote. The Vision Pro, he says, indeed represents the significant leap the company promised and early reviews indicated. I'm speechless. Look, it's not like the Vision Pro was unknown the week before when he slammed Apple for lacking innovation. Given that so many of us had already tested the device, given that its qualities were pretty well known, if you look at any of the early reviews, the whole saga is just ridiculous. Why even bother initiating coverage on the stock if you haven't done your homework on the special new big product? I regard this as pure, authentic, and natural lunacy. This is what keeps people out of good stocks. This piece, this one right here, this one. This is Exhibit A for the prosecution and why I say you need to own Apple, not trade it. Now, there's plenty of authentic stupidity that produces the same answer as artificial intelligence. They both tell you to have to own Boeing, right? Authentic stupidity says because the stock won't go down. Artificial intelligence says, well, it's because there's only two companies in the business, them and Airbus, and Airbus is sold out. There are other instances, too. Authentic stupidity caused people to sell Chipotle off weakness of McDonald's caused by lower-income customers, even as Chipotle said it saw no decline in sales from that cohort. Maybe lower-income customers like fresh and natural food as much as anybody else? That's a query worth going to Bard for. And who knows what the authentic stupidity will tell us to do tomorrow with the monster moves higher we're seeing in after-hours trading with Disney and ARM Holdings. The latter up almost 30% in after-hours trading as it's boosted its forecast. ARM, of course, is a partner of NVIDIA in its domination of actual artificial intelligence hardware and software. Another stock I tell you to own, not trade, because there are so many people who want you to trade. But the bottom line, each day on this front is a reminder that you can't just assume all the moves on your screen are products of any intelligence, especially during earnings season when the market is overrun by idiocy. So when you see some action that doesn't make sense, keep in mind that authentic stupidity is a perfectly plausible explanation, especially when it's sending down stocks that should be going higher. If people just understood what was really happening. Let's go to Kyler in Nebraska. Kyler.
Hey, Jim. Thanks for taking the call.
All right. What's up?
Supermicro is obviously on quite the run year to date, but their CEO says there's an easy path to $30+ billion in revenue, massive EPS growth ahead. And from a forward PE standpoint, the stock has actually gotten cheaper with their recent guidance. Do you think it's a good long-term hold?
Long term, yes. I think you're going to say buy it tomorrow. I don't know, because, I mean, one of the things that we've seen is that, like Eli Lilly yesterday, some of these stocks pull back and you get a chance. But when we heard Supermicro CEO on Charles Lang, I have to tell you, I was quite impressed. Let's go to Sharon in Minnesota. Sharon.
Hi. First, Jim, I want to say thank you and your team for us little guys. My husband and I had our retirement with a financial advisor at a bank and didn't realize how much they were charging in hidden fees, and it was in the thousands. They made more than we did. I think that you're a mensch, and I know your father would be so proud of you. I'm a member of the investing club, and I think it's a bargain. I find you honest and transparent, and I really do appreciate that rare quality. My question is, with AI going to need more energy to support it, what do you think of NEE, NextEra Energy?
I think that your thinking is very, very good. I like that idea. And I will tell you, Sharon, just to be clear, I come from the brokerage industry, and there are many, many great brokers and advisors out there. But I am honored about what you say, and I know that Pop did love the show. He used to call me every night at 7 o'clock, said, Jamesy, that was the best show ever. And you know what? My daughter does it now, and I love it. Anyway, when you see some action that doesn't make any sense, especially during earnings season, keep in mind that there's a new thing. It's not AI, it's AS, authentic stupidity, and it's causing a lot of perfectly plausible moves. Look like they're good, but they're dumb as wood. On Mad Money tonight. ELF has become the ultimate TikTok trend, and this quarter proved it. I'm digging into the beautiful report turned in by the cosmetics company when I sit down with the CEO. Then, after some big moves from Ford and GM, do these stocks still have room to cruise higher? I'll provide an update on the space and breaking down the latest in the two names. And Mattel has drawn the attention of an activist investor who wants to see some changes at the legacy toy maker. I'm hearing directly from the CEO, who's done a pretty much of an amazing turnaround. Let's see what he has to say of the challenges. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.